Hi, everyone, and welcome to another in our Know What series. My name is Dale Ford, and today we're going to be talking about setting up a business. We've had some experts walking us through that process, but today we're going to be chatting with Rashida Parasram, who's a certified chartered accountant with over 15 years combined experience in consulting, accounting, audit, and business advisory within Barbados and regionally. Currently, she's the managing director of her boutique accounting firm with responsibility for managing the accounting and business advisory needs of a diverse portfolio of clients. She's also the founder of Feed Passion, a leading entrepreneurship resource dedicated to women ages 21 to 40 in the Caribbean, and iCanvas Eyewear, a retailer of stylish prescription frames at affordable prices, catering to women. So we say hi to Rashida. This is the first time she's on the program with us. Hi.
Hi, thank you for having me.
Oh, we're so happy to have you. The first thing I'm going to ask is, what does a certified chartered accountant do?
Well, basically, what a certified chartered accountant does is primarily work for businesses and sometimes individuals in helping to get their financial statements put together, advise and consult them on anything financial in terms of loans, in terms of how to present their financial statements. So basically, it is an accountant. It's just that we've studied for a particular designation, and now we get the right to say that we're certified chartered accountants.
So this is more than just putting things in a spreadsheet and keeping a record. This is a surface, a financial surface that any business which wants to uh, be on sound footing and move forward to the next level, or even if it just is comfortable staying as a small business or a medium-sized business, should have a certified chartered accountant or at least have some kind of consultation with them.
Yes, that's exactly right. In terms of it's beyond moving from a spreadsheet or even accounting software, it is making sure that the financials of the company adhere to international financial reporting standards. It is understanding when you go to a bank the terminologies and having the sit down with the banking officers to help those companies access funding. It goes even in terms of helping shareholders understand what is happening within the business because sometimes we make presentations to the board of directors so that they understand what is happening financially within the company. So yes, it moves beyond just simply keying information into a spreadsheet or into a accounting software package.
All right, so you have a presentation to walk us all through that this evening. I'm just going to sit back and listen. You told me that I can ask questions in between. I have some ready, but I'm going to let you start. So you take it away, Rashida.
Okay, thank you so much, Dale. So the presentation this evening is primarily centered around someone who's looking to start a business, especially here in Barbados. You may not have any experience before. You had a hobby that you're turning into a business, or it may be a case where you may have gotten to the stage where you already started to sell your product, you started to sell your service, and you're looking to figure out what should I do next. So this is just a very quick overview of how to um, transition from a hobby and just a passion type situation into a little bit more structure so that you can get idea as to how everything should come together. So that's what this presentation is about today.
Mhm. Okay, I'm excited. Let's go.
Crazy. So I entitled it Be Your Own Boss because that's exactly what you are. You're becoming the boss of your business. So it's all about understanding what your company is about, understanding how the income is being made, how you're spending the money, and putting all of that together so you have a better understanding of what's going on. As Dale said correctly, I am a certified chartered accountant. I'm also a serial entrepreneur, so I've been in this position more than one time. It started NPR Consulting, which is a product-based business, as well as which is a service-based business, as well as in starting a Canvas Eyewear, which is a product retail type business. Two very different spectrums of the same um, lane of the same, two different sides of the same coin. So, in terms of starting your hustle, these are my startup tips. Many times people they say that they want to get into business or they want to start a business and they don't really have an idea as to what they want to do. or in some instances, they have a very vague idea as to what it is that they want to go about doing. So I primarily advise anyone who's looking to start a business to do some research, get out there and see what is happening in the market, what is happening um, in a particular area that you want to get into. If it is a case where you want to sell a particular item, get on Facebook to see if there are any pages that are similar, whether it's locally, whether it's regionally, whether it's internationally. Also, get advice. I think one of the biggest things that an entrepreneur can do, especially when you're starting out, is to get relevant advice as to what to do, where should you go next, etc. There's several programs that are out there depending on the age of persons that cater to them. One of them will be the YAS program. If you are very young, like you're 18 and you're not starting out for the very first time, that will be a program that will be instrumental in giving you great advice. The other thing that most people recommend and is highly, highly practical is getting a business plan. The business plan doesn't have to be 100-page document. It's just you sitting on with a pad of paper, or if you want to tape it up, to kind of identify who your customers are, where your market is, who you're selling to, what methods you're using to sell to that person, um, what are your sales targets, how much money do you want to make when by the end of the year. Those are the different things that are encapsulated within a business plan. And sometimes what ends up happening is that you start off with this great idea, and by the time you go through the different components of the business plan, you realize, well, what the idea I started with is not necessarily the end point I have now, or you pivot the idea a lot while you're working out the kinks in terms of trying to figure out the different things like the marketing strategy, figuring out, should I have another partner? Should I just do this by myself? Where am I going to get the money from? So those different things are encapsulated through the process of doing the business planning. And I think it's very, very, very instrumental when you start it up. Like I said, it doesn't have to be a 100-page document, but at least having a plan and idea as to what it is that you want to accomplish or want to do is very critical. There's a lot of information on the internet about business planning. So if you just type in business plans, you can even get templates for the types of industries that you or services that you want to get into. In terms of getting feedback, feedback is very important, but you need to be very conscious and be very clear as to who you're getting feedback from. So, for example, if I was starting a business where it was food related, yes, I want to get the feedback of the persons in my household in terms of, how it tastes, what's the presentation like. But then I want to move beyond just the persons that I'm familiar with. And I might want to do some sampling for some other people. So I might reach out to friends and friends of friends and ask them if I can do like a focus group so I can get some feedback in terms of, what do you think of this idea? What do you think about this product? What do you think about the pricing? So that before you even launch into the market full scale, you have an idea as to what might sell, what might not sell, what tastes good, what doesn't taste good, where you need to work on your presentation. So you just don't start thinking, oh, well, this product is fantastic and I'm just going to go there and it's going to make money. Another key thing is to determine your startup capital. The startup capital is basically the money that you're going to use to start your idea and where you're going to get that money from. I'm going to dive a little deeper into that one later in the presentation. And the other one is to test your business idea cost effectively. And I must emphasize cost effectively. When I started Feed the Passion at that point in time, I knew I wanted to transition to having a website. I knew that I wanted to offer courses because all of that came also the business planning element. However, what I did, the first initial iteration of Feed the Passion was actually a Facebook page. It was free. It gave me an opportunity to interact with my target audience. It allowed me to get feedback. It allowed me to determine what I would add, what I wouldn't add. So by the time I was ready to launch the website, there were certain things that I knew for sure I wanted to have on that website based on the interaction that I was having, because I used the Facebook page basically as a mini website and a way to interact with persons to also get additional research as well. So there are ways for you to test your business idea cost effectively. I would recommend, rather than paying for a website, that you use whatever free websites templates are available through WordPress. If it is that if you can do an online store and you're just using Instagram, that can also work. So use those types of free um, services that are out there, so that you don't have to incur a huge upfront cost when you're testing the idea. Many people, believe it or not, find it kind of difficult to choose a business or how to get into a business. And they're kind of like searching and scratching their heads trying to figure out, like, how do I actually choose a business idea? What ideas do I choose? And I think that you look first to see what your passions, your interests, and your hobbies are, because businesses are born out of your passions, your interests, and your hobbies. For me, Feedy Passion was born out of a passion and an interest that I had to contribute to helping female entrepreneurs, get into business. I don't know any issues that they may have, offer courses to teach information that may not have been readily available. So that's where that business came out of a passion. Other businesses come out of your wanting to solve a particular issue or save um, the particular market that you're going into money, or you want to do training and education. And I must emphasize that starting a service type business is far easier than starting a product or retail type business, and it's not as cost. It's not, yeah, it's a little bit more cost efficient to start a service type business than it is to start a product or retail business, because you don't have to look for inventory up front. If you have a laptop already, and you have the apps or the software already, you basically can get started like tomorrow. So it just depends on what it is that you want to do.
Okay.
So you have a question?
So far very well laid out and well explained. So not at this time. I do
Okay.
want a little bit more information on the business plan, because I know that's one of the areas that our members in this particular group have concerns about. It seems and sounds so intimidating. So, when you finish the presentation, though, that's one of the things I want to ask you about. But
Okay.
continue for now.
Okay, no problem. So 5 ways to tell if you have a good business idea would be, as I said before, create a business plan. And as Dale had requested, we'll touch on that a little bit at the end of the presentation. And the plan is basically a overview or a highlight of what it is that you're trying to execute. You create a prototype if you can. Some businesses, like a service, you may not necessarily be able to create a physical prototype, but you can have an idea of the different features that you want to offer for sale. If it is that you have a product, you want to be able to give something in terms of your potential clients so that they can touch, they can see, they can try. You talk to the potential customers, as I said before. When I first started Feedy Passion, what I did is that I used Facebook as the means to communicate. And at that point in time, there wasn't Instagram was not as popular as Facebook. So that was the primary social media platform everybody was using. So it was easier to reach out to persons on Facebook. I ran ads to get the particular post into people's faces and to get content and to just generate a buzz. So you want to be able to talk to as many people as possible about the potential idea for honest, good feedback, not for the bad-minded type of feedback. You don't want somebody being jealous of you and discourage you. You want feedback that you can take, that is going to help in terms of executing the idea, not just somebody just being jealous. And if that's the case, please desist from it. It doesn't make sense. You also get feedback from, like I said, from your target audience, from your friends and family, from the friends of your friends, just to make sure that you try to catch a wide range of persons. Also, don't go to the same persons or the same types of people. Try to make the target audience that you're using as varied as possible. If it is that you're providing a product to primarily women, understand the age categories that you're providing the products to. If it is to a younger demographic, then it wouldn't make sense to have retirees in your target audience, because that's not the demographic that you're trying to target. So make sure that when you're talking to your potential customers, that they fit the profile of your typical customer as much as possible. I will also recommend doing a pre-launch, which is also going along the lines of testing the idea so that you can, I don't know, case you can get additional feedback. You can see what works, what doesn't work before you go on a grand scale and launch the business. And I'm telling you this also from experience, because what I did when I started Feeding Passion is once I realized that there was getting some traction on Facebook, I decided to do this big launch in terms of for the website and stuff, and that did not work at all because that was not the nature or the gist of what Feeding Passion was. Feeding Passion was a virtual hub. It was a place where people came together online. So trying to take that experience and just putting it out there into a physical space didn't work because there was no transition period. There were no small events leading up to the big event. There was nothing like that. It was just, well, since I got the interest in this group of people, I'm just going to do this large event and boom, everything's going to work out. That did not work. So I would definitely recommend that you do a series of events, a series of launches, if it's something that is virtual, depending again on the service or the product. Let's just see how you can transition it offline as well and turn it properly into a physical event or a physical space, but definitely lead up to it. Just don't try to do it all in one final swoop because it would not work out very well for you. Securing your business name. It's very important to register your business name. A lot of people start businesses and they don't register the business name. And I think that is a disservice to them, because if you have a name such as Feeding Passion, you want to make sure that you're the only person that can operate with that name. I mean, it took me a while to come up with the name Feeding Passion, as simple as it sounds. And I know people have very emotional ties to the names that they use for their businesses, or they have a particular purpose or reasoning behind it. And if you don't want to put in a whole set of work into your brand and into your marketing, and then somebody goes to Kaipo and just decides, well, they like the name too, and they register it, guess what? You're out, because you didn't take the extra step to go to Kaipo to register. You went the other route in terms of investing into the branding and the marketing, and that's fine. But I would strongly recommend that you register your business name. So that you can secure that business name, so that when you go out there, that there's nobody that can come after you and use or utilize your business name. And if they do that, if there's an element, there's a legal process or there's some legal footing that you have in order to stand on. Not only is registering your business name important from a trademarking standpoint, it's also important from the perspective of, if you're taking your business serious and you want to open a business bank account, they're going to ask you for your business name registration application, and for that certificate certifying your business name. So that's also very important. It's a very critical document, particularly for self-employed persons. Having that registered business name is very important to actually do formal business as well. When to register your business name? As soon as possible. You don't have to necessarily wait until you have been operating for like a year or 2 years before you go and register the business name. By the time you realize that that's the name that you want and you're going through the process of getting the logos and the branding, please go and register your business name. Because to register the business name is $104. So just bear that in mind. When you go, you have to have the application forms, etc. on the Kaipo website. You can download the forms and you can go in and you advise them what you're coming to do, and they will be able to assist you further from there. There is a difference between a registered business name and a registered business. And what you should note is that your registered business name is basically the name that you choose. For example, Feeding Passion. So I can go there and I can get people to address the company. I can have an email address, I can have a website, I can have a bank account, I have a mailing address, etc. So everybody knows it as a formally set up entity. With the registered business name, however, that is still tied to me, Rashida Parasram. When you have a registered business and one that's like incorporated, what ends up happening is that there's a separation. If this was Feeding Passion Inc., that means that Feeding Passion Inc. is a separate entity to itself. There's no tie to Rashida. So anything, for example, if there were any debts for Feeding Passion and they had to be paid or outstanding, there's if it's just my registered business name, I will have to give up my personal assets or my personal money in order to settle those debts. However, if it's with Passion Inc., then there's a separation, and then my personal assets don't come into play. It's just the business assets that will be there. And when you're naming your business, if it is not a incorporated entity, please exclude Inc. or Limited from it, because that has, like I said, a different connotation altogether. You're just registering the business name, Feed the Passion. You should also have 2 or 3 other names that you would like to have as well, because in the event that the name that you want is taken, you want to have a backup name or a backup of that backup name when you go into Kaipo. As I was talking about opening a small business account. So basically what you need to do when you're going to a financial institution to open a small business account is, as I was saying, you have to have your business name registration certificate as well as an application for registration. That is a document that you will fill out, and that will be given to Kaipo, and then Kaipo basically stamps that and stamps the receipt as well, and you get your business name certificate along with your application as well. So those 2 documents are necessary for opening the bank account. You'll need 2 forms of picture identification, proof of address, a company stamp, and a minimum deposit of $250. So a company stamp is literally the rubber stamp that will have your company name on it, so that if you have to make any official correspondence, you can stamp it with the company stamp, and it will have the address in some instances on the company stamp as well. When I was talking about startup capital, one of the areas I was saying is that you need to understand the sources of funding and where you're going to get money from. So, and I need to also understand how much money you're going to need. So this is the section that I'm going to go into that in a little bit more detail. So in determining your startup capital, you need to determine if you're going to acquire any assets, which is basically like equipment that you would need for your business. So if you're opening a hair salon, for example, would you need to get 2 or 3 dryers? Would you need to install a sink? Would you need to have the chairs for your clients to sit in? Would you need to have blow dryers? Would you need to have brushes, combs, scissors? All of those different things will come under assets. And basically the equipment that you're going to use to execute the service or in order to sell the product. Your expenses are the things that you have to pay out money for. So are you going to rent a space, right? Will be considered an expense. Are you going to hire another stylist? That will be another expense to you. Utility bills. So anything that you have to pay out money for is considered your expense. Your income is where you're getting money coming into you, or money coming to you as a part of providing your service or selling your product. So once you've finished, you've booked your appointment with your client, the client comes, you do the client's hair, you style the hair, and that person leaves and pays you. That is your income. So any money coming into the business from a product that you're selling, or a service that you're selling, or if you're charging a delivery fee, for example, for taking a product to a client or going to a client's home, those things are considered income. Your opening cash requirement is basically the amount of money that you need when you open this business from day one. So how much money are you going to need to open the business from day one? You look to see how much clients you're expecting to have. You look to see how much expenses you're looking to have. And once you have an idea of what your expenses are, and you have an idea of where you're getting money from, you can have a better idea of what your opening cash requirement is. So that opening cash requirement can come from if you had done sales prior to the official launch, that forms part of your opening cash. If it is that you're going to just take 100% funding, that those funds that you receive, those are going to form 100% of your opening cash requirements. So basically your opening cash, it lets to see what your expenses are so you can cover them. It lets to see what assets or equipment you need so you can cover that. If you're going to have stylists or if you're going to have employees, you want to make sure you have the cash to cover those as well. And that will form your opening cash position. So the idea of getting started capital through a loan is nothing new. And I think, speaking under correction, but based on what I've been seeing within Barbados, I find that the credit unions are more willing to work with the entrepreneurs than some of the other financial institutions. So primarily, a lot of the source of funding for small businesses comes primarily through the credit union. And some of the reasons why persons approach the credit unions or any financial institution for that matter for a business loan, but because they want to start the operations, they want to expand, they want to acquire, for example, you have higher cars, you want to acquire another car, you go to the credit union or whatever financial institution you choose, and you start the process to acquire a new vehicle. It might be a case where you want to bring in additional stock for a particular event. Now that COVID has arrived, business is a little different. But for example, if it was under normal circumstances and crop over was happening and you foresaw that for the crop over season that you would have an uptick in business and you wanted to, prior to the crop over season being here, you want to bring in the inventory early enough to capitalize on those sales that you were looking to have, you might go to the credit union as well to get funds to purchase additional inventory. Sometimes it is a case where you're having like a bit of a cash flow problem, so you need to acquire a loan to help with the cash flow or to help mitigate some of the issues that you're having. So you want to get a loan in those particular instances just to help with your cash flow situation. And if there's a building or piece of equipment that you're looking to purchase, you also can acquire a business loan to do that, so that you utilize the money from the financial institution and also help to manage your cash flow a little bit better. So you're not taking your reserve cash necessarily to go and pay for that equipment 100%, and then you burn through your cash. But before getting a loan, I think you need to understand if you really do need a loan. And the first question that you should ask is it what is the purpose of the loan? Is the purpose of the loan to expand? Is the purpose of the loan because I'm having cash flow difficulties? Try to understand the reason why you're going in for the loan, because you need to explain to the financial institution as well and be able to articulate to them why you're coming in for the loan. So it makes sense to explain that, okay, I need $100, for example, I'm going to go to credit and get $100. And then when they go through the application process or they go through, so they'll ask you various questions and they ask you, what's the purpose of the loan? What would it be spent on? You won't be able to be in a position to say. You should always go to the financial institution having an idea of what it is that you're looking to purchase, and their application process forces you to do that somewhat. So for example, if you're looking to acquire a vehicle loan, they have a vehicle loan application process where you have to bring in a valuation of the vehicle that you're getting, so they understand the movement that you're looking to get, etc. So even though the application process kind of forces you to do it a little bit on your own, you should still have an idea as to what it is that you want the loan for, how much you want, and how many years you're seeking to pay back the loan as well. You also should look at the different types of lending options. As I've been speaking, I've been talking about the credit union, but the credit union is not the only option available. You still have the traditional banking institutions like the commercial banks. There are also other financial institutions, like, I don't want to put a plug for any particular person, but the consolidated finances, the Signia finances.
Yeah.
You should also
Finance is one that we've been working with as well, because we've had
exactly
idea. On with that. So
also,
is one of
yes. And finance is actually a very good source for startup companies as well, because they do work very well. Because I do have a client who was able to start her business through the loans that she got with Finance. What I think Finance does a little differently than what the other institutions do is that you would get a check first, but it also depends on what it is that you're doing. But typically, they give you a check and you cash the check and you make the disbursement, or they write the check in another, like if you're purchasing a vehicle from a vendor, the vendor's name, and the vendor has a check, and that's like a one-off transaction. With Finance, what they do is that they require you to bring in your invoices from the supplier, and you give it to them, and they make the disbursements on your behalf. So you're actually not necessarily involved in the process. So if it is a case where you're starting up and you identify a rental space, they will give the landlord directly the check for you to be in that rental space, and then you just pay them back for the portion of the rent, the money representing the rent that you would have borrowed from them. So the loan is structured in such a way that you're repaying a loan, yes, but the disbursements are going directly to the vendor. So I think that's a little bit different. There's also the trust loan scheme that has been that was a recent initiative of government as well. So there are various options available. It's just about researching the options and seeing what works best for you, depending on what it is that you're looking to do. And it should tie into a specific business goal. You're not just going out there to borrow money for the sake of borrowing money because it's a cost to you. So it should tie into something that is going to be very specific. If it is that you're going to buy a piece of equipment, not a piece of equipment that you cannot then generate additional income on. You want a piece of equipment that's going to help you increase your sales. So just don't buy a piece of equipment because it looks fancy or it'll be nice to have. You also want to make sure that it's tied into a specific goal. It has to increase your revenue. So always look to invest in equipment or when you're going to get loans, invest in equipment that will assist you in getting additional revenue. The goal is always to make more money. So the loan should always be for something that's going to help you to make more money from an expansion point of view, from a sales point of view in terms of inventory, from any piece of equipment that will make the job easier and more efficient so you can crank out more items. If you're manufacturing, those are the sorts of business goals or the objectives that your loan should be seeking to meet. The amount of money that you need to borrow would vary depending on what it is that you're looking to do. So, and it depends on the type of business and the type of industry that you're in. So there's no one size fits all for a particular need that you're borrowing money for. I can start up a business for $5,000. You may need $10,000 to start your business because you have a different spin or there's something else that you want to add to it. So, but what you should do is have a very good idea of how much money you would need so that when you approach the financial institution, and they're like, think about it in terms of a mortgage. When you let to go and buy a house, you have an idea of the amount of money you want to spend on a house, right? And you will go and you'll sit down and you said, okay, I have $350,000 to spend on this house. And you go to the market and you realize houses selling for $500,000 and up. When you go in, the financial institution is going to be like, well, the house you're looking at is like $500,000. How much is the deposit that you're willing to put forward? And all of those different questions start to pop up, and you're like, well, it's just kind of like looking for like a $50,000 house. But the point of that is that you have to have an idea as to what it is, so that when they start to ask you additional questions, like, do you have a deposit that you're going to put down? How much are you going to be putting towards it? So we're not going to lay 100% financing. You have to contribute to loan. When they start to say things like that to you, that you're prepared for that. So you have an idea of how much you need to borrow, have an idea of what a deposit might be, try to get from them if it will be 100% financing or if it's not 100% financing. Generally, the length of the loan will be governed by the amount of money that you're borrowing and what the financial institution's take is on the particular item. So like vehicle loans do not span 30 years. A house or a commercial property will span 30 years. So it depends on the type of loan that you're getting. And most financial institutions will ask to see a business plan or they'll ask you for cash flow projections. They want to have an idea of how you see this business performing in the future, or they'll get a sense of what the business is from the business plan. And you gather all your documents together, you have a conversation if you can prior to that, before you actually have a sit-down meeting, and you try to get a sense of what it is that they're asking you for. If it is that there's a loan application, try to go through the loan application prior to going in. So, because sometimes what they'll have on the loan application is additional documentation that they'll require that you can start to gather, so that when you go in, it's not a matter of, well, did you bring this? Did you bring that? Everything is already there. You prepare for the meeting as thoroughly as you possibly can.
Okay.
So as I was saying, the types of financial institutions, I did mention the credit union, as you said, Finaccess is a very great source. So you have the commercial banks, which are traditional, credit unions, which are also a bit traditional, microfinance institutions, which would be like the Finaccess and the Trust Loan Scheme, crowdfunding, which is something that is pretty new. There are a few crowdfunding institutions in the Caribbean, but it's not as popular as it is in the international market. There've been a couple pitch competitions over the years, And remember, 10 Habitat had a pitch competition at one point in time. Investors, this is for when you have, like, I would say, a more robust, more seasoned, more, when your company is incorporated and you're looking to expand, you get in the realm of investors. Not to say that you can't with a business that you're now starting up, but the investors more tend to more look for more mature, more structured businesses, friends and family if possible. And I know many our family and friends can be very ticklish, but there are some instances when it does work out. And if you can um, get it through the friends and families where there wouldn't be a cost attached, like the interest or anything like that, then that's a possibility. But more often than not, most people go the first three to the commercial bank, the credit union, or microfinance institution.
Mm-hmm.
And for small businesses, it's very important that we build trust with the financial institution that you are going to, or the one that you decided to approach for that loan. And the reason for that is that you want to make sure that your loan repayments are on time. You want to make sure that you don't have any issues defaulting on that loan, because once you have a history and you have a good reputation within the institution of repaying the loans and stuff like that, it makes it a little bit easier for you when you want to go for a second loan. The process is not as serious because you have a loan officer, you've been working with that loan officer, they're familiar with you, they're like, yes, you pay on time. And once you build that relationship, it's a little bit easier to access money the second time, the third time. Also, like I was saying before, do not take on unnecessary debt. If it is that you want a loan for $20,000, don't go more than $40,000 because you can use the extra $20,000. That's not how it works. If you want, if the piece of equipment costs $20,000, any incidentals may come up to $2,000, then borrow $22,000. Do not go overboard thinking that you're going to get extra money and save it for a rainy day, because you're going to have to pay money interest on that. You have to make loan repayment, and you don't want to be doing that at such a cost to your business that it puts your business adversely, affects your business adversely. You want to make sure that any repayment that you have to make, that is something that you can afford. So don't take on debt unnecessarily. And there's always a benefit for having the item in terms of the additional revenue that you can generate. But like I said, there's always a cost. The loan repayment and the interest that you have to pay will always be the cost to you. So you want to make sure that when you're going to get the loan, once you finally identify how much it would be with the loans officer, that is something that you can comfortably meet. If you cannot comfortably meet it, reconsider the amount of money, or reconsider the timing of it. It may be a case where you may not be able to afford it this year. Is it something that you can look to do for the following year? Because you can put it back, but it'll be better for you to go forward with it in the next year than try to scramble to do it this year. And then you find that you're having difficulties meeting the loan obligation. That doesn't build trust with the financial institution. So you always want to make sure you're not taking on unnecessary debt. You weigh the costs and the benefits to avoid defaulting on the loan, and that you want to build a good relationship, and you're repaying the loan as quickly and as within the loan terms as possible, so that the loans officer, you can build a very good relationship. So it makes it a little bit easier the second time around when in for the loan. So some of the common documents that are requested would be, as I said, your business plan, your cash flow projections. Some institutions ask for bank statements, a certificate of registration. In some instances, a tax clearance certificate is requested. They may ask you for invoices to support, for the vendor to support the purchase. So there are different variety of documents that can be requested depending on the type of loan that you're going for. And some of the pitfalls to avoid when you are applying for the loan is to make sure that you have adequate records of how the business is performing. You don't want to go without having financial statements, for example. You want to be able to demonstrate how the business is doing. Make sure that if there are permits or licenses that are required in your industry, that you have those permits and licenses. that your business is active, because you wouldn't be able to get a loan if the business is inactive. And as I said, if you don't have a clear objective or purpose for the funds that you're requesting, then it makes it more difficult for that loans officer to play into what it is that they're lending you the money for. Now, in terms of running the business, one of the things that most people have to do is that you have to price your products, you have to price your service. And most oftentimes, what ends up happening is people will see, for example, Rashida is selling a product for $10 and Suzanne is selling a product for $11. So they're going to come into the market and they're going to sell the product for $9 because it's going to draw persons to them because it's the cheapest product on the market. That is not the best way to price a product. Pricing a product, there is a strategy and there is a methodology to it. And I thought that it would be important to kind of work through how to price a product, because more often than not, people generally look to see what other people are doing and they just price the product based on what they see others are doing. But that's not the best way to do it. So there are basically three methods or three ways in which you can price your product. There's a markup method, there's a psychological pricing strategy, and then there's competitive pricing. So with the markup, what ends up happening is you purchase an item for $1 and you determine that you want to earn 50 cents every time you sell this product. So what you end up selling the product for is $1.50. So the cost for you is the dollar and you're taking 50 cents for every item sold, and that's where you're getting your profit from. Also, that 50 cents, you don't have to pay any expenses that you have outside of getting that item, if it is that you're importing it or if you're buying it locally. Also, the cost of getting that item that you're reselling, if it's a product, you have to know, for example, rent, insurance, gas, all those different things have to come from your 50 cents. So you want to make sure that when you're adding on or you're marketing your product, that you are very, very much aware of what your expenses are for the business outside of and including getting that particular product. So if, for example, on a monthly basis, I have operating expenses of $50 and it costs me $100 in order to acquire the products that I have, I want to make sure that when I market my goods, I'm getting in excess of $150 because I need to make a profit and I need to make sure that as I pay out my operating expenses, I still have money. So that's where the idea of a markup comes from. The psychological pricing is one where you see $9.99, $19.99, $19.95. The idea of having less than that rounded number. So $9.99 sounds a lot cheaper than $10, but it's just 1 cent away from $10. But the idea of it being $9.99 and you're not hearing $10 makes it seem as if it's so much cheaper than $10. $19.95 again is less than $20, just 5 cents less, but you're thinking less than each time. So that's what the psychological pricing does. It can also work on the other end where people charge a premium for their products or their service. So the premium price implies a higher quality. So you're expecting, for example, when this is like Gucci versus a no-name brand. When you hear Gucci, you're already anticipating that the price is going to be at a premium because of the brand associated with Gucci. Versus a no-name brand, you're not expecting to pay a high-end or premium price for that because at the end of the day, it doesn't have the branding, it doesn't have the reputation of the Gucci, for example. So that can also come into play as well in terms of psychological pricing. Competitive pricing is similar to, I see Rashida selling it for $10. I see Susan selling it for $11. So I'm going to go in, I'm going to sell it at $9 and I'm going to undercut Rashida and Susan and I'm going to get more business because I'm looking to drive business away from them and drive business to me. So competitive pricing works like that, where you look to see what the market is selling a particular item at, and you either come in at the same price as the market, or you come in below, or you can even come in above. The issue with the competitive pricing is that I might not have to pay rent at my $10, and Susan may not be paying rent, and she may not have employees at her $11. So If you have to then go pay rent and pay employees coming in at $9, which is undercutting us, you're putting yourself at a disservice because there are expenses that you have that we would not have. So we're making a comfortable profit at our $10, $11, whereas you're scrambling to get a profit at your $9, and you can't understand because you're getting more people coming to you based on volume because your price is so low, but at the same point in time, you're not making ends meet because you just can't figure out. But when you look at your expense structure, you have additional expenses that we don't have. So just because a competitor has a particular price, it does not necessarily mean that you should charge it. It may work out to your advantage to charge the same price, but you should always base your pricing by looking at your cost structure. What are your expenses? The cost to acquire your product or your service or to render that service. And then those costs outside of the product, your expense costs, your rent, your gas, your utilities, your cell phone bill, those different expenses also have to be factored in coming up with a price. So it's just not enough to say that you're going to charge what somebody else is charging, or $9.99 sounds cheaper, so I'm just going to charge $9.99 for the product, or I just want 50 cents as my markup. That's not enough. You really do need to understand all the different costs that go into the product. In addition to that, from my experience working with self-employed persons and micro businesses, one of the biggest things for them is they're so caught up in the day-to-day working of the business and generating or creating that product, rendering the service, that a lot of the admin falls by the wayside. And it's not necessarily a case where the business may be in their mind big enough to hire a person to do it, or they may want to save that money for something else. So they're taking on the responsibility of keeping their accounts in order, but it doesn't ever work out. And one of the biggest things as well is not separating their personal expenses from their business expenses. So while they're running around and they're on the road, they stop to get gas, they stop to buy groceries, then they pick up some stationery for the business. And when they're trying to account for how much the business expenses are, they lump everything together. And that's a big no no. Your business expense is just an expense that is common in your business or is necessary for your business so that you can provide that product or service. So if you are including groceries in your business expenses, that's a no-no. Anything that you do for your personal, your hair, your nails, your groceries, all of those things have to be excluded from your business expenses. You can include purchasing raw materials if you're making a product. You can include having to purchase an asset or purchase stationery. If you're traveling, if you have a vehicle and you're putting gas in the vehicle and you're using that vehicle for the purposes of making deliveries for the business, you can apportion part, if not all of that gas into the business. If you're renting and you're operating from home, you're able to also apportion a part of the rent to your business expense because the idea is that you have a home office. So you're apportioning a portion of that rent to the business. So that is allowed. But 100% of the rent wouldn't be allowed, especially if it is a home that you're utilizing for the purpose of the business. So one of the very, very key things in keeping the accounts in order is understanding what is a business expense and what is not a business expense, and only including business expenses into your accounting information or accounting for the business. And this is going to affect you primarily when it comes to filing taxes. Because at the point in time where you're filing your personal tax, if you aren't um, a incorporated entity and you're self-employed, you will file your personal taxes as a personal or individual, which is the April 30th deadline. So at the point in time of filing your personal taxes, what will happen is you have to give account of your income and your expenses, and that is where you would then say what the business related expenses are, because you're only interested in the business related expenses, and then you will be your tax will be calculated on that. So it's very important that you separate your business from your personal expenses. So some accounting tips that I would recommend to any self-employed person and anyone that is doing the accounts for their business is to separate the finances. As I said, you always track your income, always track your expenses. You want to have an idea of how much money you're making You want to have an idea of how many clients you have, who who are the clients that generate the most money for you, who are your repeat clientele. Track your expenses. You want to have an idea of what's your largest expenses on a monthly basis, where the bulk of your money is going. Is it going in salaries? Is it going in travel? So that you will be able to cut back if you have to. If you have the bank account, as I had recommended, review your bank statements. You want to make sure that you have an idea, because everything, if you have direct deposits set up, you would be able to track that better through the bank statements. You want to make sure that on a monthly basis, that if you're writing checks, that you also factor any direct deposits that will be coming off of the bank, which you wouldn't have a record on in your check. But you want to invest in accounting software. Unfortunately, I can't say that there is a free software anymore. What was a free software are also available to us in Barbados was Wave Accounting, but that's no more. Everything that I've found so far requires a fee, but Zoho Buts, Zoho, Zoho Buts is actually a good software for somebody that's doing it on their own. You don't need a degree in accounts to kind of figure it out. It's kind of very self-explanatory, and it's very easy to manipulate and easy to use. So Zoho Buts is a good resource in terms of accounting software. I think they have a package that starts at like $9 a month. I think that that's probably one of the better ones. When you talk about QuickBooks and stuff like that, those things can get a little bit pricier, and Zoho Books gives the same functionality as QuickBooks, where you can generate an income statement, you can generate a balance sheet, and those are the two things, for example, that the financial institution will want to see, and that takes into preparing your financial statements. It also helps if you then decide to hire an accountant at some point in time, having the entries in accounting software package will help, so that it makes the review process a little bit easier. Because what happens over time is that those deposit slips tend to fade. Your invoices may get faded, and you may not be able to see what was on the slips before. So it makes it a little bit difficult to come in after the fact and kind of try to account for stuff if it's kept in a shoebox. So the best thing to do is to invest in a accounting software and to transition from a box and try to key as much information as you can into the accounting software. Other considerations would be NAS. I definitely would recommend for self-employed people to contribute to NAS, to have a private or separate health insurance outside of NAS for themselves, a life insurance policy as well, to have insurance. This is just not health and life insurance, but property insurance, because you don't want insurance for your equipment. You don't want that there's a hurricane or there's a flood, your equipment is damaged, and you have to pretty much buy everything over from scratch. Try to have the key or the important equipment that you have insured. Public liability insurance is important. I think this comes into, it may be covered depending on if you have, depending on where you're renting. Some places cover the public liability within the rent, but you should also just look to see if you need public liability insurance, particularly when you have persons coming onto your property. That is very important. So if there's any falls or accidents, you're covered. Let's just say if there are any licenses that are required for you to operate within your industry. So for example, you need a taxi license to operate, you need a ZR license to operate, you need a hire car license to operate. So some industries require a license. Make sure that you have the required permits and licenses, like your licenses, for example. And always consider the fact that you will have to pay taxes is a requirement. So if you're self-employed, even if you're making a loss, you're still required to file taxes, because that is the requirement by law. And that would be under the new system, which is TAMIS. If you're not registered, you can go into BRA to get assistance with registering for TAMIS. It is not difficult. However, if you need assistance in terms of filing the taxes, you can contact an accountant to assist you with that process. BRA also puts on tax clinics as well, depending on the tax season. So you can attend a tax clinic. I know the last one was a virtual one. You can attend a tax clinic to get some further assistance and guidance in terms of how to file your taxes. And that is the end of my presentation. So Dale, any questions that you have, I will take them at this time.
That was a very good presentation. Thank you so much. It was so thorough.
You're
I,
welcome.
I did have let's start with the last, which is taxation. Um, as a
Yes.
business, I think you touched on it, but I just want you to re-emphasize it. When to become a limited liability, or if to just operate when you register. Now, just tell us again what the difference is between those two things if
Okay.
you're incorporated and if you're not.
Okay. So when you first start a business, most people, they're starting from home. It's coming from a hobby or passion. Most of us will start the business as a registered business name. It's very informal. It's just you going about there, getting your clients and doing your thing, doing your nails, baking, selling, whatever. Once you, there comes a point in time, however, when you want to rent a property, when you want to acquire assets, when you want to start to become legitimate, quote unquote, that you would then say, okay, now I want to have this business incorporated. And for every business, it comes at a different point. There's some persons who never incorporate a business and they're successful at that, or what they're doing. They're not incorporating the business because they find it easier to operate as a sole trader or an entrepreneur
Mhm.
or under just the registered business name. There are other persons who, for example, will be like, okay, they want to have a retail space, they want to own a commercial property, they want to get into the realm of hiring employees and having an office structure for that. So it, and depending also on the amount of money that they're making, and depending on, yeah, the money that they're making and some of the contracts that they may have may require them to incorporate the business, because that has happened in the past where the person was operating as a sole trader and they wanted to get a particular contract. And in order to get that contract, to bid on the contract, they had to be a registered company. So they went through the process of incorporation to become a registered company so that they can bid on the contract, or because they were being awarded a particular contract. So that happens as well. So there are different points in time when you transition from just being that sole entrepreneur by yourself doing your thing, maybe having one or two people assisting you, to when you become a, when you expand and you become a larger entity. There's some people, however, that start off as a incorporated entity. So, for example, if you're starting like a doctor's practice, you may start off as an incorporated entity. You register a company and you start trading, or you start operating behind that registered business, behind that incorporated company. So there's some instances when people start off from the jump as a incorporated or limited liability company. But if you're transitioning from working from home, now building out your hobby, your passion, taking it more serious, and you're transitioning, it tends to be a slower process. But it comes a point in time when you recognize the benefit of it. And at that point in time, most often not is when you then start to go the incorporation route. And it's more expensive to incorporate a company, right? So incorporation usually starts from like $2,000 and up. It's also if you have the funds as well. So you may be making that type of money in your home-based business, and you decide to make it more formal and you go through the process of incorporating the company. But there's also a lot more paperwork and a lot more requirements when you incorporate a company. They need to identify directors, they need to file documents with typo like annual returns. They need to, depending on how many persons are in the board of directors, you need to issue dividends. There's a whole other set of things that come along with having a company that you don't have to worry about necessarily when you're a sole trader. So it depends on if you want to also go through the hassle of having to take on what will be required for a registered company as well.
Taxation. When you are a sole trader, is there a threshold that you have to reach before you pay taxes? Just word that, explain that to us. When do you have to start paying taxes as a business owner, and what taxes do you
Okay.
have to pay?
Okay. So when it comes to taxes, you have a personal allowance of $25,000. Once you exceed that $25,000, you will be paying taxes. So what happens is that say for example, at the end of the year, I made $24,000 and I factor in my business expenses and I end up with a net profit of $2,000. Then that first $25,000 is tax free because it's covered by the personal allowance. So I wouldn't have to pay taxes. It's after I factor in my expenses from my income, deduct the expenses from the income. If I'm exceeding $25,000, then I will have to pay taxes. So that is personal taxes. So that's under the TAM system. That's the one that's filed in April. That's the one that most persons are familiar with because even if you're an employee, you have to file your taxes. So it's the same process for a self-employed person. It's just the method in calculating what has to be paid is a little different. But once you have your net profit and it's under $25,000, then there's no tax payment. If it's over $25,000, then you have the tax payment. The other taxes that would be important would be VAT. If you're meeting the VAT threshold, then you have to apply and you have to register for VAT, and you have to pay VAT. So your VAT threshold is $80,000 annually, I believe it is. $80,000, $120,000. That was the old threshold. It's $120,000. It's a new VAT. Sorry, I'm telling you the wrong thing. It's $200,000. If you're making $200,000 annually, you have to register for VAT. So if your income, regardless of once it's local income, and you exceed $200,000 on a monthly basis, I'm telling you the wrong thing. For VAT, let me start over. For VAT, you will have to pay taxes if your annual income is over $200,000 or if it is $16,666 a month. Once you're making that, then you have to register for VAT. And once you register for VAT, that's something that you will file every 2 months. So you will go in and you will submit a VAT return every 2 months for VAT purposes. So that has nothing to do with your personal taxes. That's just you calculating VAT, charging the client VAT. And if anybody charges you VAT, you net off the differences and you file that in TAMS under your VAT return. So once you're making $200,000 annually or $16,666 monthly, you have to file VAT. So that's another tax. You have to. There's NAS. NAS is not necessarily considered a tax, but NAS is also something that you would have to pay or is recommended that you pay. Your NAS, you register as a self-employed person. Your NAS rate, I think, is 17.5%. You go in, you make 11.75%. You go in and you make your payment, and you can do that on a quarterly basis because self-employed persons pay NAS on a quarterly basis. You can also make a tax payment. So if you know what your tax position is for the next year, you can go in and can make a prepayment towards the next year's taxes. So those are the ones that I know for sure that you will have. If you have a company and you are an employee of that company, what you will have to do is that you will have to submit pay as you earn, PAYE, which is a familiar concept to most persons. So again, you're going to TAMS and you'll file your PAYE based on the salary that you receive on a monthly basis.
All right. Last thing, because you did answer the business plan question that I did have, you handled that and you were very thorough on that. The last question I'm going to ask before we wrap up, you mentioned these new things of funding and you mentioned crowdfunding. And you did say it's not something that has really taken off in Barbados, but how open should business owners be to this new kind of funding?
This is crowdfunding in particular?
Crowdfunding in particular, digital currency, all of these things that for some of us may seem, we're a little not sure about, and we're not comfortable. Okay. We have to at least have some information about it.
Okay, so in terms of accepting payments, there are many ways that persons now can accept payments. You have the money transfers, you have the Gift Shepherd cards being used, you have persons doing direct deposits into other persons' bank accounts, and Bitcoin being used as a means of accepting payments as well. So there's several options available to you. It's what you're comfortable with. Some people work with the swipe machine cards, and they can still access payments through credit cards. So it takes it from the traditional credit card and check, and it opens up a whole new world in terms of accepting payments. It is what you're comfortable with. If you are comfortable accepting these swipe cards, if you're comfortable with Bitcoin and you understand it and you're open to it, then by all means you can accept the Bitcoin. If you are comfortable with money transfers, then by all means you can accept them. I wouldn't say that you should shy away from any one particular thing. What I would say is that you should get as much information, as much knowledge as possible about what it is that you're getting into. That is from the perspective of accepting payments from your customers. As it relates to the funding, pitching, like I said, that's more of a competitive thing. So it is, I have a business idea, I have a particular pitch that I want to tell the particular judges, so I go and I pitch my idea. Somebody else pitches their ideas, and the grand prize might be $100,000 in cash, or it might be equipment, or some other thing that they come up with, or it might be a mixture of different things. Bike on Me is a good example of a pitch competition that we are familiar with here in Barbados, because you saw different contestants pitch their ideas for a grand prize in front of a judge. So that's what a pitch competition basically is. And there are various pitch competitions, not just in Barbados, but regionally and even internationally, that you can enter. And if you're successful, that is fantastic. You get access to the prize money, and it helps with your business. It helps your business to expand, start, or grow. So that's great. In terms of crowdfunding, one of the examples of crowdfunding would be when you see persons set up a fund, and they're asking people to, like, for medical purposes, they set up this fund and they're saying they're accepting contributions from different persons so that they can meet this financial goal or this financial target, and they can have this operation. It's mostly done with persons who are sick and stuff like that. Take that idea and you can bring it towards a situation where you are asking a group of persons or a group of investors to invest into your business, invest into your idea. um, so when you think about crowdfunding, it's not just one person investing into the business. It's a group of people or several people. Again, like I said, it's not very popular here in Barbados, but it's not something that, again, you should stay away from, particularly if it is a reputable funding base that you're going to be using. The idea is to research as much as possible, have a thorough idea as to what it is that you're getting yourself into. There's several different things that are available, not just to within the region, but internationally. But the idea is to make sure that you're not getting yourself mixed into something that is a scam. Do as much research, see if you can find anything about, find out as much information about it as possible. If there are any red flags for you, please do not do it. So, and I said that to say that sometimes things may seem to be on the up and up, and they're not. For example, for me personally, I had an encounter where I was trying to resolve an issue that I was having in QuickBooks, and I actually butt up on a scam through the legitimate QuickBooks gateway. So what was happening is that there was an employee within QuickBooks that was redirecting persons who were making calls to their help center to an outside source, making it seem as if it was a QuickBooks legitimate setup, because that person had access to QuickBooks information, and it was a scam. So you just need, and in Googling and trying to understand what was happening is how I found out it was a scam, and a scam that was running for quite some time. So you just need to be cognizant of the fact that everything may not be necessarily trustworthy. Do your research into it, and once you're comfortable, then go ahead and do it. But if you have any reservations or red flags, don't do it.
All right, Sheila, thank you so much. Rashida Parasram is a certified chartered accountant, and she has walked us through the important steps of setting up a business. She's dealt with so many different topics that we had questions with here: station, business plans. She just ended off with telling us about crowdfunding, finding new
Mhm.
ways and more online ways to be able to receive and to make payments.
Yes.
And of course, if you're going to be going to have a loan, you're going to have a loan, all the documentation you need to have, all the different things that you need to have. Rashida, thank you so much. This has been so informative. I just want to remind our viewers and listeners that you are, as I said, a certified chartered accountant, and you also have a business, I Canvas Eyewear as well, and you're the founder of Feed the Passion. So Rashida is a resource person. I believe that you will be able to draw on, and I believe we're going to be drawing on you again. Thanks so much, Rashida, and we look forward to having a chat with you sometime in the very, very near future.
Thank you so much, Dale. It was a pleasure. Thank you so much. Thank you.